All right, so let's talk about how you spend money out of a private trust. So when the trust is created, right, our trust is a non-grantor trust. So we use a law firm to set it up. The law firm then appoints you the trustee, which is all of the power over the trust, including over the bank accounts, the money, the investments, everything. Once that grantor resigns, you are now independent of this trust, okay? So the trust is there for the benefit of the beneficiary. So if you have kids, grandkids, and they are your beneficiaries, the trust is going to use its money to take care of those people. Now, when you first create the trust, you got to keep in mind that you own assets right now, whether you own a business, cars, homes, jewelry, crypto, stocks, all of these assets that you have been accumulated with personal income. That means that you've already gone to work, you've already paid taxes, and then you went out and acquired all of this stuff, right? We are going to sell that to this trust. This is not a legislative law trust where you're just conveying your assets. Conveyance means you're just picking up your house and you're moving it into a trust that you own. See, when you have a private non-grantor trust, you don't own the trust. See, Americans got to learn to get over the word ownership. Ownership doesn't mean something belongs to you. Control does. You cannot own something, but you can have full control over it. And you have the exact same benefit of the guy over there that owns his property. But guess what? If I control an asset and I get sued, you're not getting to my asset. I control the asset. I get to live in the home. I get to drive the car. I get to do all the same shit I get to do when I own it. But when I own it, I'm liable. When I own it, you can sue me and you can take anything away that I own. So now, once you sell everything to the trust, you're going to create a bunch of debt, right? Because we don't want to hold on to money in our own name. The trust is going to pay all of its expenses. So if it owns your house, owns your car because we sold all the assets to the trust can legally make money, defer taxes, and then pay all of its expenses. So now you say, well, Josh, what if I want to go on a personal vacation and it has nothing to do with the trust at all? Well, that's what the debt is for. You sold all of your assets that you paid taxes on that money to acquire to the trust the day you created it. Now, the trust didn't have money to buy all that stuff, so we create debt. That is called a promissory note. That is the consideration to make it a legal sale. So now if you had millions of dollars worth of assets, you sold all that to the trust, you essentially now have a bank account in the trust with millions of dollars sitting in it. You want to go on a vacation? Take the money out. You don't have to pay any taxes on it, folks. It's that simple. Click the link in the bottom.